Yo, what's good? Welcome back to this section of the course. In this section, we'll be going over supply and demand. So, getting right into it, this was about the open of New York Stock Exchange. Yo, welcome back to this section of the course. In this section, we'll be going over supply and demand. Let's get right into it. So, we're sounding a little sick or something. I just woke up. I'm just trying to get this out of the way today. Some of these explanations for you guys. So, let's get into it. Right here, we're gonna do boom. Okay, so pretend as if this were candles, right? These are all down candles, and this is the up candle. So we'll do something like this. Okay, so this is basically, I'm going to teach you guys what supply is. So say we're on an uptrend, right? These are the up candles, these are the down candles, and this was the last low of the market structure. We're going to want to mark that low up and wait for it to be broken. And as you can see, we had a little break structure of this last low right here. So where's the supply zone? Supply zone is going to be right here. So we're going to mark the low and the high of this zone. Okay, so when looking at a supply zone, what we want is a break structure, a little bit of an imbalance, and we want price to come back into the zone. So we'll mark some bullish candles up to come back into the zone, right, to then drop. So this is a perfect example of a supply setup. Okay, so where would you put your entry? You put your entry right here and have it right above your stops, right above the point of interest, supply zone. And then you would want your take profit at the low or the swing low of the move. So usually I just put it here, but you know, if there's other setups, other confluences to put it lower, you just extend it, simply put. But for this setup, we'll just put it right here. So that is literally supply. So it's the last up candle before the big impulse down that broke structure. Okay, and then for demand, mark up demand for you guys. Demand is just the opposite, literally the complete opposite. It's the last down candle for the big impulse up. So say we're on a downtrend. Okay, do one more. We're on a downtrend, right? We got down candles, and now we've got a big impulse up, just like this. So what do we look for? Well, say this was the last high, price broke it, right? We'll make it a little bit more simpler for you guys to understand. Okay, here we go. So say we're bullish, right? And we're making just higher highs, higher lows. Okay, this is the low right here. I explained this in the market structure section of the course. And this is the high. So the high got broke, right? And we also had this demand zone right here. The last down candle for the up move, breaking this structure, breaking the last high. Now being put, this is just a continuation zone. You know, I'll explain liquidity and everything else in the other sections, but this is just a simple continuation setup. Market structure happens a lot. Sometimes it might not work out because this right here could be formed as liquidity, so price can come back down to a little lower of a zone, demand zone, to continue up. But I'm really just explaining demand right now. So we had up move to form the high, we had the down move that formed the higher low, okay, and then we had the impulse up, which broke this high. So we mark up the last down candle for the big impulse up that broke structure. And now what would we wait for? We wait for price to literally come back down to our zone to continue up to these highs. So I'll mark this up for you guys and make it simple and clean. So down candle, down candle, down candle into our demand zone. And then we'll have up candle, and boom, okay. Take profit right here. You take profit at this high because it was from the bottom that we formed the demand to the top of the move. That's how I trade. Okay. So the bottom of the move was the demand, the top of the move was our take profit, and the very bottom of our move was our stop loss. Entry either at 50% or just the entry of the order block, the demand zone. Once again, take profit at the high of the move, and stop loss at the bottom of the move, and the bottom of the demand. So boom, okay. So once again, the last down candle for the big impulse up, breaking structure. Wait for price to come back down to mitigate this zone, to retest it, to then continue up to take out these highs up here and take your profits. So that's demand. It's pretty simple. You know, I'm not gonna make it complicated for you guys at all. Another setup that is pretty good. So say we've got highs, right? Higher highs, higher lows. But we've got this gap right here. We want price to not come down into here or into here. We want price to come down into this demand zone right here to then continue up to get our profits, because as you can see, this was all efficient. This was inefficient right here. You know, there was this gap. Once again, I go over this in the imbalance section and the liquidity section, proving which demand you should take. So don't get caught up in demand zones. Don't take every demand supply zone that you think is valid, because not a lot of them are. You need to choose them wisely. You need to use correct risk management, and you need to stick to your plan. So we'll go into a real chart now. Show you guys real examples. So the 15-minute, let's just start from right here. So I'm pretty sure I marked up good stuff that just explained what I was talking about. So, alright, we've got what? You need to read the market. This was liquidity. You know, you could either market that or how I market, sell side liquidity, because people are buying from here and we need to stop them out. So they got stopped out. Okay, the first demand zone was formed on the 5-minute. So if you look on the lower time frame, on the 5-minute, we had the break structure, right? And we also had our demand zone right here. Boom. Okay, so where do we want to enter? We want to enter usually off the 50% or just the entry of the demand zone, the point of interest. Now you can mark up the full, you know, the full candle, or you can mark up the body. But usually with these, I'll mark up the candle because it was a wick. So if price breaks this wick right here, then I know 100% that's invalid. So you could put your stops, once again, the take profit at the high of the move, right? Or you could put it at the overall high if you do see this continuing up. We had gap right here that we needed to fill, and we also had this liquidity that needed to be taken out. So as you can see, price literally, I think this was, yeah, NYSE open, price flew, took all this out in our full TP. This was an 8R, 75 pips, 8 pips risk, 8.5 pips risk. That's not bad, good move. So now going back to the 15-minute, this was our confirmation that we're moving bullish. That now we can look for more buys. Where do we want to look? The last demand zone before this mitigated zone. So I'm going to delete these. I'm not going to delete them actually, I'm going to keep them there. I'm going to mark this one up, extend this. So now we wait, and it's all a waiting game with trading. You know, you gotta have a lot of patience, but before you know it, as you can see, price might have missed this. So let me look at the 30-minute. Okay, so this is a little bit more. I usually don't mark up 30-minute at all, but I did have this marked up this day. I think this was Tuesday, because I had this one, this setup, this 5-minute, and then this 30-minute setup formed. So once again, high of the move, and have your stops at the low of the move, and entry at the 50%, tapped in perfectly. If you go on a lower time frame, you can see if there's any confirmation setups. There's not, but simply being, this is how you read demand. Okay, so once again, you wouldn't want to take this demand. Why? Because there's liquidity right here, and there's still a gap under here. This demand down here, you know, a lot of people could have taken this. Invalid. Why? Because there's still gaps to be filled down here. So price stopped all these people out, you know, faked them out, come up here, almost hit their TP, comes back down, takes them out because they're now the liquidity of the move right here. Okay, so we need that stop out. Boom, stopped out, taps into our demand zone perfectly, and it continues up. Simple as that. Now for supply setups, we'll keep going, keep looking for a setup. I only backtest the session I trade. So when you're backtesting, don't look at anything else. My sessions are kind of messed up, so I can't really tell where I'm at right now. So I gotta look. Alright, so 4:30. So we wait until 9:30 to start backtesting. So we're at 9:10. Okay, 9:30 hit. Now we wait. And okay, so this was the 3-minute that we caught. We mark up the supply setup once again. I'm telling you guys, if you use this setup, and if you study setup, if you backtest it, 99% win rate, 90 to 99% win rate on this one. You need price. Let's delete this first. So explaining into it in depth, right? This right here is liquidity, because tons of people are selling in this area. We got tons of wicks with this huge wick right here. Okay, so we need that to be taken out. Price comes down, doesn't take out these lows, so this is a double bottom that needs to be taken out next. Okay, double bottom is major liquidity. Double bottom, major liquidity. Okay, price stops out all the buyers. I'm sorry, I just woke up, so I'm a little tired. Price stopped out all the sellers selling in here, right? Prints a supply right after taking out these sellers. So that indicates that this could be a very good setup. And now what do we wait for? Boom, 50% tapped into. Once again, stops at the high of the move because this is a supply. So stops at the very tippy top. And take profit at the bottom of the move. Boom. I mean, if that isn't the simplest trade that you could have taken, I don't know what is. The 1 minute was way bigger. That's why I had the 3 minute marked up. Personally, I didn't take the 1 minute. I never would because that's like a big stop loss. So when you're marking it up, make sure the stops are decently small because you're gonna get more for what you risk. You know, if you're taking a 50 pip stop loss and your RR is like 2R, you know, you're not gonna make as much as you're gonna make if it was like a 5R. So that's why you guys see me entering in like 50% a lot, because if I were to enter in down here, it wouldn't have even been a 2R. But since I entered out 50%, it was pretty much 5R. So I more than doubled what I would have made if I would have just entered right here. So yeah, supply, simple as that. There's really nothing more to it. Just don't get caught up, you know, at all. If people were to take this setup, you got smoked. This setup, you got smoked because there's a higher supply that you could have taken up here but didn't get tapped into. Now this is the setup that I posted on my Instagram a couple days ago, right? Why would I take this? Well, I'll show you. So look, okay, this was liquidity sitting up here, but for this move, what I saw was a gap right here that got filled completely, busted through it, and we also had liquidity for the time being right there. Okay, so all of these orders got stopped out, and on the higher time frame, I think we had a supply sitting right here, which we did. Okay, so boom, this was 3 minute supply that got tapped into. So that's a little confirmation. Delete this for you guys. So I'm gonna make this more clean so you guys don't get confused. So we had the buy side liquidity that got taken out, right? Price on the 3 minute tapped into our three minute zone. Okay, so I'm not gonna mark this as my usual GAN box just to make it more clean. So this was the 3 minute point of interest, the 3 minute supply zone. Now drop down to the 1 minute. So boom, now more confirmation. Okay, so the 3 minute was already mitigated, and now we're looking for the next supply zone that formed, which was this one. Now I marked up the doji because a lot of people were asking me this on Instagram when I posted this. Why did I take the doji instead of this candle? Well, simply put, this high of this candle was higher than this one, right? Than the up candle for the big impulse down. So I marked up the doji. It gave me a little bit more breathing room, you know, because if I would have had it right here and price came up to like right here, I would have been stopped out. But since we had our stops a little bit higher, it worked out perfectly. So we had the break structure right here. Okay. We had this little gap right here. This little inefficiency. And if you want to pull the fib lines up with the supply. So boom, price didn't close above our fib level, so I usually still mark that as valid because I mean the candle didn't close above it, it just wicked it. So once again, entry 50%, stops at the top of the move, take profit at the bottom of the move. So this is clean. We also had this liquidity right here. This needed to be taken out to the upside before we bought down. This was also a little bit more confirmation. If there's a liquidity sitting, close to the point of interest, it gives us a little bit more confirmation. So we had 1. So let's mark our confluences right here. Excuse me. So we had buy side liquidity taken out first, right? Supply formed as a doji. Inefficiency right below supply. Fibonacci. And we had buy side liquidity sitting under supply that needs to be taken out. So this is 5 confluences that we had right here. As I explained the confluences part, you need 3 to 5 per trade. Wait, and boom. This was a 12R within about 10 minutes. Once again, this is why I trade the lower time frame, especially on NAS. You can get high RR within a couple minutes. It's ridiculous. Now being put, you can also lose in a couple minutes. That's why I preach psychology. I preach making yourself a trading plan. I explain all that in the other psychology section of the course. I really nail that down for you guys because it's really important. But just make sure you have the correct trading plan. Make sure you come into the market with a positive mindset, because once you come to the market with a negative mindset, you already lost. But this is supply and demand. This is how I trade it. I'll explain all these confluences throughout the sections, but that's really it, guys. So I'll see you in the next section.